Monday, March 13th. Well, we've got some interesting developments this morning. As everybody knows, that Silicon Valley Bank folded on Friday, but now the Fed says all is well and good. So what we have is some very interesting technical moves in the interest rate futures, precious metals, and indexes, stock market indexes, and some sectors as well. So we have an oversold condition. The first thing that's extremely important with the S&P 500, the SPY, anything directly connected with it, the E-mini, the micro-mini, of course. So at the moment, we're not very much higher on the day, only about 50 cents. But it gapped down this morning. That could have been an exhaustion gap. It was substantially oversold, and I'll get to that on the other screen in a moment. That is a condition under which markets tend to turn back up again for a sizable rally. I'm not saying it's turning into a bull market one way or the other, but a sizable rally when you get that oversold. Okay, so I'm turning friendly as long as the market stays firm, higher on the day, the stronger the better. In fact, if it were able to, and it's not out of the question, get above the high of Friday, you will be above the 200-day moving average again. You will be above a resistance line again, like we were a week or two ago, actually Wednesday and earlier of last week. You will be back up above old bear trend lines, which we're currently below, but the high of today is well above that cyan line right here. The level's about 388 and a quarter. And the high of the day is 390 and a quarter or so. We need to get above 393 to be exact. 16, 393.16. If you're above that, we'll have a bullish engulfing, ER, green buy signal, similar in some degree to October 13th. Now, on a longer term basis, and let's go to another page here, workspace, on the SPY. There's your downward slanting channel, your long-term bear market from the beginning of 2022 to basically the end of the year, lasted a whole year. We broke the bear trend line. We went back below it. We went back up above it. And now here we are below it again. But this is the first time that we are oversold 2 days in a row since the overbought condition, which was on February 2nd. So when you see yellow and you're in a down move, you're oversold. It implies, very strongly so, that you are about to rally back up again. Now, I'm saying this despite the fact that we're turning red by a tiny bit. We're down a few ticks, making a minor new low for the last hour or two or something. Doesn't change my mind. I need to have it close strong. I want it to close close to today's high or higher than. And if we get above Friday's high, you're going to have some very important reversals, but it hasn't happened yet. So keep in mind that it could. We're only halfway through the trading day at 10:02 California time. Now, let's go to the DIA. So we got a variety of reasons to turn friendly all of a sudden because of the down gap, the oversold condition 2 days in a row, the level of the oversold condition, and the possibility of a bullish engulfing, which, you know, I'm not going to get another recording going at the close. So watch for these things. All right, DIA, very similar situation. Oversold 2 days in a row, very oversold. The last time we were oversold was in late September. Last time we were at this level or a little lower. It's possible that we could go down 1 or 2 more days and get even more oversold. That's quite possible. But this is not a good place to be looking at shorts unless you're extremely good at trading and you're very quick to get out of profitable trades, etc., and quick to change your mind, because we're setting ourselves up for a good buy signal, a very good one, which could be developing today. DIA is no exception, approximately unchanged at the moment, up a few ticks, no big deal. The stronger it gets, the better it gets, and we could not, with a lot of trouble, get above Friday's high for a bullish engulfing green buy signal. The first one I had was a bad signal, and that was only on February 23rd. So it was less than a month ago. Remember, I mentioned once in a while, these signals tend to cluster. And approximately a month, you get 2, 3, sometimes even 4 of them. Of course, only one of them, and usually one of them is the highest high for the trend or the lowest low for the move down, which this one could be if we got above yesterday's high, period. What about the QQQs? Well, they came damn close already to having a bullish engulfing, almost getting above Friday's highs, but it never got oversold. So I didn't turn yellow. So therefore, I'm not going to have a green bullish engulfing official buy signal. It came very close. This morning, the low RSI reading was, and that's the QQQs, 28.13. I like 25 or lower. Most people use 30 or lower for stochastics and relative strength for the oversold level. I am a little bit more lower on my level. I like 25, not 30. So the DIA got to 25 or lower. The spiders got to 25 and lower. The Russell 2000 got to 25 or lower, quite a bit lower actually. And we have a gap to close in the 2000 above Friday's high, below Thursday's low of last week. And there is a gap at 408 in the spider, and we're trading at 90 at the moment. Or no, we're trading at 385 at the moment, 386. So that's quite a rally, 22 points. Could happen this week easily enough. We just have to have the strength to do it. And I've got some reasons for this too. So listen up, we're going to talk about futures cooperating with the rally in the stock market indexes in a moment. So I've said my piece here with the indexes. I think that this is an oversold condition that could be a low that we're going to look back in time and say, yep, that was it. Monday, February or March 13th was a bottom. I need the strength. I need to get stronger. I want to close higher on the day, and I want to close, if at all possible, above Friday's high. Asking a lot, but it could happen. Now, futures. Look what is happening, and I'll get to the interest rate futures in a moment. The E-mini is the same, of course, as the S&P spider. We are a little bit higher at the moment, but this is delayed data, so keep in mind it's 10 minutes late. Yellow, yes. Friday and today. Oversold condition, yes. Last time it happened was very close to the bottom on December. December 19th. Or actually, December 20th. The time before that, and it went right back up again after fiddling around for a week or two. Before that, October 13th, my whopper of a buy signal that I talked about coming up beforehand a month or two early. That's the October lows. Look at October every single year going back as far as you want in time. You will find frequently a buying opportunity. Sometimes they're not particularly fantastic or great, but after approximately October, or October specifically, you'll find November and December usually went up. Sometimes the October low is extremely profound and a whopper. We had been going down for a month or two, and it turns up in October. I don't care why. Some people claim it's an election thing. Some people claim it's something else. I have found not the correlation I would like to have found. All I know is October, and that's all. That's good enough. It worked this year incredibly well. Again, we need to turn around and start to rally very nicely. Next chart. Bean oil. We're breaking down. We're seeing lower lows and below support lines. Soybean oil is getting more and more bearish. Minor problem at the moment is it's oversold. Not unusual when you have a downside breakout. So you should expect that very soon we're going to hit a minor low, come back up to approximately today's highs, maybe Friday's highs, maybe even a little bit more than that, but not much. I'm talking 57, 58, something like that, 55.80 at the moment. Next chart. Heating oil coming super close to breaking down below that support level. I've talked about this for a couple of weeks now. You start closing below that green line, you've got yourself a beginning of a major breakout to the downside. And if you close below 2.32-ish, you got a huge, major, long-term bearish breakout in heating oil. Next chart, and I think it's going to happen. Natural gas. We picked the bottom of the market with an ER green buy signal on February 22nd. So far, so good. Typical move up, got a little bit overbought, almost, not quite officially. Remember, 75 is my number. Originally, Wells Wilder came up with 30. But come on, everybody. He developed this in the 1960s when everybody was using only daily data. There was no such thing as the internet. There was no such thing as a 5-minute chart or 1 minute. Everybody used by hand, drawing by hand, daily data charts or weeklies. That was it. My original charts are daily data charts I drew by hand. I started in 1971, drawing charts. Next chart. Crude oil. Here is a support area I drew in this morning, that red support area. We bounced off of it again this morning. If you start closing below the bottom of the red zone, which is below 70.70, you have a major long-term breakout again. So I'm bearish on crude. It's not stopping. I think we're about to break down big time. We're not oversold, so we've got a little more elbow room. May not be today, but maybe this week. Next chart, corn. I also talked about this breaking down in the last couple of weeks. It sure as heck has. And today, we almost made another new low for the move down. But look how oversold we've gotten. And we do not have a new low in the RSI, while we do have a new low in price, which is what's called a divergence. And it implies that the market's going to come back up where? To probably 634 and then turn back down again. But some sort of a rally short term in a bear trending market is usually a good opportunity for a short sale. Next chart. Soybeans, Friday, silver, sorry, not soybeans, silver. We had a buy signal on silver. In the last approximate month, we've had 3 now buy signals. First 2 didn't work, but they actually did work. You had certainly a profit potential for a day or 2 or a little more on each of those previous buy signals. Did it turn the overall trend? No. Is this one, Friday's buy signal, turning the overall trend? Well, look at what happened. We have a whopper of a buy signal on Friday and an incredible, huge rally today. You realize we wiped out the highs of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 previous trading days, 3 weeks, 2.5 weeks in 1 day. Actually, in 2 days, including Friday's low. That's it. We probably have a longer term trend change as of Friday and a huge rally today. I love it. This signal could go down as a whopper in the months to come. Next one is platinum. Same kind of commentary. We had a great buy signal a couple of weeks ago on February 27th. Classic little rally out of the buy signal, a retracement, typical, not too bad, a little scary, of course. And look what happened Friday and today. Boom, boom. Today, new highs totally. Ever since February 3rd, well over a month and a third. New highs today. Platinum. That's silver and platinum. What about gold? Yep, same thing. Unfortunately, gold is getting a little overbought today. So we're above 75 on the RSI. and that implies that it's about to run out of steam for a little downside move. I don't think we're going to get a major sell signal. We always could when you're in overbought conditions, but I love what I see because our last green day bullish engulfing ER buy signal was at the bottom, which is exactly why I built this trading system. And of course, at the top, there's a red one at the top. And you go way back in time. You go back to September of 22, another buy signal. Well, actually, 1, 2, 3 of them in about a month or less. There's your clustering. And the middle one was the lowest low for quite a while. Okay, great. So all three precious metals, silver, gold, and platinum, have buy signals and are roaring up in the last day or two. Next, bond futures. I'm sorry, we didn't get a buy signal at the bottom. We did get oversold. I told you it was likely that it was going to rally some. I didn't expect it to rally quite this much, but I think the government panicked a little bit when they saw the bank go under on Friday. And now, of course, everything's supposed to be all well and good. And they're showing signs of not wanting to raise rates, which could have been the underlying reason why that San Jose, California, Silicon Valley Bank went under. Excuse me about this. And I love what I see. We are not very far, especially with the 10-year notes, from making new highs since September. That's the middle of September, October, November, December, January, February, March. That's 6 months, a half a year. If we get over the highs in December and January, we will be making new highs for 6 months. And only in a couple of days, we rushed right up close to that level. Let's look at, and that's super bullish because you're beginning to establish a pattern of higher lows and higher highs. So let's see what 10-year notes look like. If I can get there. There we go. Very similar. The last break in the last couple of weeks did not make a new low for the trend. It came down to support, got oversold, and roaring straight up. Now, unfortunately, we're a little overbought. We could go up more for a day or two, or even a little more than that. But usually, you start to get overbought above 75. You're very close in time. Could be the same day today, but another day or two of a little more strength, challenging the highest highs, maybe at 16 and a half, 116 and a half, might happen first, and then a little pullback, and then boom, up through it. And that is going to help the stock market indexes rally, I would expect. I'm not much of a fundamentalist, but that's what I'm thinking. Next chart. OJ, pennant formation, obviously. Wait for a breakout. Pennants are usually a continuation formation, so one should expect to see it break above 255 or higher soon. And we're near the lows of the pennant, so this is a low risk if you're interested in being a buyer and putting a stop underneath the bottom of the pennant. Next chart. Wheat, oversold, starting to come up. I wouldn't be surprised to see a very sharp rally, but I'm expecting it to stop around 733 and turn down. The trend is obviously intermediate to long-term bearish, and these are the lowest prices since the war started a little over a year ago. And again, yep, we got a sell signal smack dab on top of the most spectacular series of limit up moves you can imagine. As I mentioned a few minutes ago, I started in this business in 1971. The Russian grain deal happened in the early 70s, and it caused the commodity futures markets to go up like this. Series of 2 or 3 weeks, almost every day in a row, limit up bid all day or most of the day or closing back in the 72 time frame. And it looks just like the wheat market looked like in March of 22. Pretty identical. And we got a sell signal smack dab on top. Of course, I didn't know what I was doing back in 70 when I just started as a runner on the floor of the mercantile and the board of trade. Next, cattle. No real comments. Sugar, and I think I have gotten to the charts that I wanted to make significant comments about, because these others are not necessarily super profound at the moment. Soybean oil is breaking down. I've already commented about that. I do want to input something here real quickly on the forex markets and the sectors, because there's something that's happening here. This is a new high on the euro on the rally. We had a couple of buy signals that didn't work very well or at all a week or two ago. And unfortunately, at the bottom, we didn't get a signal. The DX should be going down. It is, of course, but no signals per se. The Australian dollar got oversold, popping back up, but the trend is still down. Don't see any reason to turn bullish yet. No comment, no comment, and no comment. But you'll see that all of these are either yellow or on a rally or a break, except for this one, the euro against the pound. So they're likely to turn up or down because they're overbought or oversold. Not too important momentarily. Sectors. Here we go. Look at what's happened to the banking sector here. I talked about this on Thursday, about big, huge breakout to the downside. On Friday, follow through, and this is it. Today's a low day. It gapped down, downside exhaustion gap. Extremely oversold. 5 or 4 on a scale of 0 to 100. This is about a 1 in 100 oversold level. Super, super, super bullish potentially. You couldn't prove it by looking at it right now that it's starting to go up, but that's exactly what I think is in the process of happening. It's back to approximately unchanged, and I wouldn't be surprised if this gap gets closed tomorrow, or in at least in this week. I wouldn't be surprised if we see no low that's lower than today's low, which may stand as a low for weeks to come. Incredibly oversold. The odds of this being a low day are very high. Let me put it that way. Okay, same comment for this banking sector symbol, and that's the XLF. The previous one was KBE. Same comments, downside exhaustion gap, extreme oversold condition, probably a low day. Next, XME. It is oversold, nowhere near as badly, but oversold is oversold. We do seem to have closed an old gap here. How about that? Way back in January 5 and 6. It's not quite closed. Super, super close. Remember, I say the gaps are like a black hole in space that tend to suck the price action back into the gap. And gaps are almost always closed. This was almost closed, and it's oversold. So it could be turning up, or it should turn up very, very soon. OIH is the next sector. Same kind of comments. XLB, oversold, no bullish engulfing. We had a sell signal a few days ago that's working great, but it turned into an oversold condition almost immediately. Don't go short down here. You're at support. Very accurately testing support. Again, this is probably a low day for a while. I'm not sure I've got anything great to tell you about. Oh, good. A new buy signal today, as of now, in the XLV, which is the healthcare spider for the S&P. Looks good. Generally a support area, nothing particularly exact. Pretty oversold last couple, 3 days. Bullish engulfing looks okay. I got no problems with this. Probably going to run back up to 131-ish, and maybe even a little higher. Next, XLK. No comment. Oversold condition. Probably going to turn back up on XRT. VNQ. Same comment, oversold. Notice a lot of oversold here. So a lot of these are going to try to turn back up, signal or no signal. The oversold condition implies that it's trying to turn back up. Now, that doesn't mean the trend is going to change. It just means that you're going to get some sort of a rally. XLP was oversold. IYE, oversold. SMH, at support, not oversold. Same comment. That was XLK. Here's XLY. Oversold 2 days in a row, about to pop back up again. See, a lot of these, another oversold. XLI. So we're about to have a bit of a rally here in these indexes, and that supports the stock market index in general starting to rally some. XOP, oversold. GDX, new high for a week or a few weeks, or for a month actually. No signal, minor double bottom. XLE, oversold. ITB, nothing really. XHB, very close to oversold. And that's it, ladies and gentlemen. I'll look at the indexes real quick again. So we bounce back up a minor amount. We're up just a little bit higher in the day. The stronger it gets, the more I like it. I hope to get at least a close higher than yesterday's close, Friday's close. The stronger, the better, and we could end up with some bullish engulfings. You have a great day, profitable day. Today's lows could end up being very, very important. Talk to you tomorrow.